Zach Duggar. Today I have a guest with me that's very, very interested in the real estate world and also interested in serving other people. And so I'm going to introduce Jeffrey Donis. He is one of three. He and his siblings have a business where they are serving individuals in the real estate investment world. The Donis brothers actually got started investing in single-family homes, and then they eventually built a portfolio of cash-flowing rentals and a six-figure business. Now they are invested in over 1,000 multifamily apartment units as general partners, and their target markets include Florida, Georgia, and North Carolina. Their goal is to empower others to achieve their financial goals through apartment investing, and had this passion from an early age to help others, which has really bonded them together. And if you go to their website, you'll notice that Jeffrey and one of his brothers look the same because they're identical twins. So then they have their older brother. So I didn't ask their names, Jeffrey, but if you can just share those with me. What are your two brothers' names?
Yeah, for sure. Thank you for having me also, Zach. My twin brother's name is Kerwin, and my older brother's name is Kenneth.
Excellent. All right. So, and with your company, you are the head of investor relations, correct?
Yeah, that's right.
Okay, awesome. Well, I want to just ask in regards to kind of that serving others topic. When you state that that has been something that has bonded you together for a long time, so kind of where did that start, or where does that topic of serving others come from?
Yeah, I would say initially when we first got started, it just came from our upbringing, right? So we'd see it in our mom and how she raised us. She would always help people. And then you start to, I think as an early entrepreneur, one thing that we always struggled with initially was it was very self-serving, right? So a lot of the things we were doing were for our own benefit. And as we continue learning and growing as people and as a business owner, we started to realize how many people we could help through real estate, whether that's our investors or the people living in our communities. On top of it, just everyone that we're working with on our team. It's very, very awesome. It's a great thing to see that when you're buying these kinds of properties and operating them, there's so many lives that are being affected and impacted. And when things go well, it changes a lot of lives for the better. So as we've grown as people and as business owners, we've seen how many lives we can change and serve through our own endeavors.
Yeah, absolutely. Now, so when you got started in single family home investing, how many years ago was that?
Single family was about 3 years ago. And then, sorry, I meant to wrap it all off.
Yeah.
We've been pretty active in our faith recently. So I think at the end of it, it's just treating people with the love that, we're faithful and the love that our God gives us. We try to implement that in our business, just through conversations and how we treat people. So to top it all off, that's really what we see us serving, is just trying to treat people the way that people in our community, with that kind of love that we get from God.
Absolutely. I mean, I think that there's the two primary commandments: love God, love people. So you got that right. So excellent. So 3 years ago, you started working and investing in single family homes. And for those that are going to be listening to this only and not watching this, you guys, you're all three appear to be fairly young guys. How old were you at the time when you got started in the single family business?
Yeah, so I was 18. My twin brother was 18 as well. I'm 9 minutes older, so a little bit older than him. But my older brother was 21. So we're fairly young for sure.
Yeah. I mean, I've met someone else in the area in which I live who started at the age of 19. So it just resonates with me, that story of someone who started and now is continuing to progress into success in the business in which they're operating. So starting at a young age, you get an opportunity to not have all of the additional clouded experiences of different areas of education experience. You can focus. That's where I'm going with that. Kind of get that opportunity to focus on what you're working towards. So what did any of you, like your older brother, kind of look at it as I should go to college, or let's start this business, or kind of where were you at with that?
Yeah, so we were all in school when we first got started.
Okay. Yep.
We were all on the path of going to get our degree. Most of us wanted to get into business.
Yeah.
Eventually, so two out of the three of us were definitely going to go into business. My twin brother was more not unsure. He wasn't really sure, but once we heard about real estate, specifically wholesaling through YouTube, and then
Okay.
the Purple Book, right, Rich Dad Poor Dad. We read that
Yep.
book. We read Think and Grow Rich, and that led us to reading multiple other books, listening to dozens of podcasts, and we were just getting all of this content and knowledge in a non-traditional format outside of the school system. And a lot of that information is very different than what we were being taught in our classroom, or in the classrooms that we were in. So
Yeah.
once that started happening, it changed our mindset and
Yep.
really let us know that if we want to become entrepreneurs and build a business, it doesn't necessarily mean that school isn't the best, not the right choice for us, but
Right.
there's another way to go about it. And we decided that we would, go full time in real estate after my freshman year. And
Okay.
since then, we've been joining mastermind groups. So I always like to say we're lifelong learners. I think everyone should
Yeah.
be. And it's just another way of, educating yourself. We chose to go a non-traditional route versus going to a traditional four-year college. We joined
Yeah.
multiple mastermind groups and spent, just as amount of money that you'd spend on a normal
Mm,
degree to get into
right.
this group. So, yeah,
Yeah.
we've really enjoyed it.
Yeah. Yeah. When you started mentioning masterminds groups, I'm thinking, yep, you probably have spent that money that you would have on your education, but just a more targeted focus and also an extended network of people that have been able to probably pour into you from their experience as well.
Yeah, 100%. And not only the education and knowledge that we've been able to soak up, but
Uh-huh.
really big thing that we've gotten out of those mastermind groups is the network and
Okay.
having a mentor in various different aspects of our lives, whether that's spirituality or obviously business, real estate, um, fitness,
Yeah.
things like that that come out of those groups. That in college you can get a lot of that, but not all those things right are covered. And then having those
Right.
mentors that you can have access to and spend time with, it's hard to find in a traditional college sense. For me, at least, that's what it
Sure.
was.
Sure. Absolutely. Now, not everyone knows what a mastermind is. Can you explain that a little bit so we have an understanding?
Mhm. For sure. For me, a mastermind is a group of I'd like to an easy way to put it, a like-minded,
Hmm.
like-minded group of individuals who have a similar goal or similar interests. But for me, it's not even only having the same, thinking the same way, but people that are going towards some type of common goal. And for me, what that looks like is a real estate syndication group where everyone in the group is they're apartment syndicators. They're going after large multifamily deals, raising
Yep.
capital on these kinds of deals, finding the deal, etc. So all of those different people in one area where you can all help each other and bring different resources to the table to help get deals done. So that's what our mastermind group looks like.
Yeah. Okay. Perfect. Excellent. So you had switched at some point from single family to multifamily and apartment syndications. When did that occur and how did that transition occur for you guys?
Yeah, so it was the first year after we got into real estate that we
Okay.
transitioned. And we'd
Okay.
heard from a mentor. So we've always been very, very big on finding people that we can look up to and
Yeah.
learn from. And we still are.
Right.
I think it's a great thing to have. It keeps us hungry to learn more. We always ask a
Yep.
lot of questions. And also, I like to try to stay humble in a sense of I know there's a lot more I need to learn. The more I can, the more I can stay away from thinking I know everything. I think the quicker I can learn and the more I'll learn
Yeah.
and the more successful we can be. So that's one thing that we were able to do initially. We were looking up to our mentor and we'd heard about apartment syndication. He had brought on someone into his mastermind group. There was a call that we had, and he
Yep.
brought a syndicator on who was syndicating development deals.
Okay.
Pretty much syndication, for anyone in your audience that doesn't know that, it's where you raise money from different investors. It could just be family and friends, and they're pooling their money together to go buy something. And in our
Yeah.
case, we're doing that to buy an apartment complex. So
Yep.
he was doing it for development deals. Similar approach, just a different type of investment. And
Yep.
he talked about it, and it was pretty much what we wanted to do. We wanted to get into the commercial real estate space. We just didn't think we had the right knowledge, network, mindset, money. We didn't
Sure.
have enough money, we thought, or we just weren't ready. And we realized that after asking our mentor what he thought we should do, should we
Yep.
stick with single family or should we go into the multifamily space? he just said, you're climbing up one tree regardless. Why not make it the tree that you want to end up on?
Okay.
And we were full time at that point, so we were working all
Yep.
day every day. So we were like, if
Right.
anyone can do this, why can't we? Because we see a
Yep.
lot of other people that are doing it. Because the same mindset applied to single family. We had never done a deal,
Yep.
and we saw all these people doing deals. So we thought if they can do it, we can do it. We applied the same mindset to multifamily. So that was about 2 years ago that we transitioned into the apartment space.
Okay. Excellent. And if I think I read it on the website, but which group was the primary group as far as that you received education through in regards to multifamily and
Yeah,
syndications?
it was Think Multifamily.
Okay.
The way we found it, it's based in Dallas. We
Yeah.
were surfing the web on Bigger Pockets for a mentorship. And
Okay.
as I always say, that the network is everything. So we tapped into the network, found an individual who's already in the group, and asked her what her thoughts were on the group. And at the
Yeah.
end of the day, I think it's all about connecting with people. So you can
Right.
get pretty much access to anything if you can just talk to someone through a conversation. So that's what we uncovered, was exactly what we were looking for was in this group. And we wouldn't have known if we didn't talk to this one individual. We were going to join another group. But before we did
Sure.
that, we talked to her. And it
Yep.
really changed our minds, and it was very, very important to our ultimate, getting to where we are today. So
Yeah.
that's how we've been able
Absolutely.
to get to here.
Absolutely. So if anyone out there is thinking about joining a group, whether it's in multifamily syndications or some other type of mastermind, talk to people before you do so. There are many groups on different topics. So being able to have some awareness of how that group operates and how they mentor individuals can help shape that decision. So I think that was very smart to do, just kind of identify who already has that experience and can share from that before you made that leap, because that's a big leap, a big step, because that's also a cost as well. Like you said, with any mastermind, any type of group, you're putting money out there that you expect to receive some results from that investment that you had poured into it. So, and it sounds like you have. It sounds like you have. So at this point, I mentioned at the top there that you have over 1,000 units that you're a part of. Are they all as general partners, or tell me about that?
Yeah, so they all are as general partners, and it came after joining this group. And
Hmm.
it doesn't, obviously, you don't just join the group and you get into the deals,
Yeah.
right? You do
Right.
have to do certain things, bring value, and
Yeah.
obviously we worked hard with networking and trying to build our own ability to bring value to different partners. So on the first 4 deals that we did, we were co-GPs,
Okay.
and what that is you're not necessarily the lead sponsor, which is the person that's running point on the deal,
Yeah.
but you're helping with various different aspects of the deal. And I think that's a great way for anyone to get started in apartment syndication, is to be a co-GP on deals,
Yeah.
because that way, perhaps you're brand new and you don't know how to talk to the brokers, or you're not necessarily the one going and finding the deal, but you can bring value in other
Hmm.
ways. That's what we did.
Yep.
The last deal we did, we were actually the lead sponsors. So we went and had been building relationships with brokers, eventually
Yep.
found our own deal, and underwrote it, right? Took it from walking in for the first time all the way to closing. It was a long process, but we
Sure.
wouldn't have been able to do it without the first 4 deals that we did, which were a lot, played a big role in our education and learning how to actually do a deal. And also, I think it gives you this confidence of going into it, one deal as a lead.
Right. Right. Absolutely. And I think sometimes people forget that it starts with step one
Hmm.
before you get to where you're at today. So I think
Yeah.
even just that single family space, wholesaling, building up a network has built upon your confidence and ability and skill set to get to where you were able to be a lead sponsor on a deal. So that's awesome.
Yeah.
Okay. And then how does it work with regards to syndications? A lot of people talk about helping others with syndications. And when you've mentioned earlier about syndications, you're receiving money from other people to help be able to take down a larger asset. How is that helping those people that are putting money into the investment, like saying, okay, I'm going to give money to Jeffrey and his brothers because they're going to go buy this apartment complex? How are you
Yeah,
helping those individuals?
for sure. And there's a lot of different benefits to just investing in real estate in general.
Hmm.
But to start off with just being a passive investor, a lot of investors that have invested with us, for instance, what they're looking for is one, they're full-time, whether they're working at a bank, full-time having their own construction company, whatever it is, they're not full-time real estate investors, which means
Yeah.
that they can't go and find the kinds of opportunities that we're finding because they're not
Sure.
talking to brokers, right? And if they did talk to brokers, they probably wouldn't know how to underwrite the deal, and it does take a long time. So
Yeah.
by us doing all of that work up front, we're presenting them with an opportunity to invest in a deal that will provide additional benefits. But that's one thing, is you're providing someone an opportunity that they couldn't have found without you. And a lot of these
Okay.
deals are, some deals we do are 506B versus 506C. Now, I'm not an attorney, but some of those deals they just won't ever see because it's closed
Mhm.
off to a small network. So
Yeah.
again, that's another benefit, is you have access to deals that the public doesn't have access to. Now, on
Right.
top of it, when it comes to just real estate in general, you're helping certain investors who, if they can qualify with their CPA as real estate professionals, they have access to some great depreciation benefits, which overall will help them save money on taxes. Obviously, right now we're living in inflationary times with everything going on in the economy. So there's a lot of inflation hedging when you invest
Yep.
in real estate. As you know, the value of the dollar goes up, so do the prices of our assets. So it kind of works as a hedge against inflation. On top
Yep.
of that,
Okay.
when it comes to just cash flow, a lot of people that invest with us are looking for cash flow or some type of passive income, some way to replace their high income that they're getting from their job with something that will pay them without them having to actually go and do additional work. Right? We like to call it
Sure.
having your money work for you versus working and spending your time on money
Yep.
to gain more
Yep.
money. So that's the ultimate goal, right? That's a way that our investors benefit. And at the end of the day, I think it's something that a lot of these people enjoy doing, investing and growing their wealth. Perhaps they want to hand it off to their kids. That's something that I want to do, and spend with my mom as well. I want to be able to retire her and be
Yeah.
able to pass something on to my children. I grew up low income, and a lot of our investors, they're at this point in their life, they're high net worth, but
Sure.
a lot of them do come from lower income backgrounds. So just being able to pass it on to the next generation, I think real estate gives them an opportunity to do that, and through these opportunities that we're presenting them.
Yeah. Yeah. And you hit a solid point there, that it's not just about building wealth for yourself, but
Yeah.
having an additional why. Why are we doing this?
Right.
What is the end game here? And you and your brothers, you've mentioned that your goal is to retire your mom. I mean, I think that's amazing. I think that is what any mother, father would love to hear from their sons, that we want you to be able to stop working. So, I think that's cool.
Thank
Um,
you.
but and even that, even beyond that too, is then, well, okay, what's next? What else can we do? If we
Yeah.
have more, we can give more. So I was reading someone today, just a little bio on top of what they said, that um, I think it said something along the lines of we exist to be able to, man, I'm going to forget it now, but it's essentially
Yeah.
like as we receive, we're able to give more. So it's
Yeah.
not blessed to be a blessing. It's exactly what it was. So being able to be seen in someone's eyes, you might be seen as somebody who's wealthy,
Yeah.
and that's fine. That's great. But the more you are blessed, the more you can be a blessing for others. So, and I think that's
100%.
hits what you guys are doing and the hearts that you have behind the work you do. So I appreciate that. Um, two other questions I have.
Mhm.
So in regards to returns on investments, there are a lot of different things people can do, and a lot of people invest in the stock market, and that's the main thing they hear. But we've seen that go different directions.
Yeah.
What type of returns can people anticipate potentially receiving? It's always not necessarily guaranteed, just like any investment. But what type
Right.
of returns can people receive?
Yeah. In regards to specifics, we try not to go into too many
Sure.
specifics because of
Okay.
the SEC and all. But in regards to real estate, I'd say real estate isn't something where you're going to be able to, on our kind of acquisitions, you're not going to be able to retire off of one or two deals. It's
Hmm.
typically something that we consider to be more conservative. And as I mentioned, it's in regards to an overall portfolio, you're not going to
Yeah.
break the bank on one, right? It's going to be something that perhaps on this side, and I'm not a financial advisor, obviously,
Hmm.
full disclosure, but on one side of your portfolio, I think it's always important to have real estate. because it provides that stable, reliable income, and it's a hard asset, meaning it's not subject to the volatility of the equity markets or Bitcoin or just the sentiment in the economy or market, regardless of what's going on in the world. Real estate typically, as long as you buy right, in my opinion, regardless of the appreciation value, because obviously that is something that we look at, but it's all about cash flow for us. That's why we're cash flow investors. So when we buy a property, we look at it based on what do we think we can get in regards to rents, what our expenses are, trying to maximize NOI. And at the end of the day, if it makes sense in regards to our appreciation and we can sell, we would. But we're trying to hold on to these properties long term. So when you go in with a business plan like that, I think the real benefits to the real estate is more so it's reliable, it's consistent, and there's additional benefits in regards to tax benefits versus you're trying to, 3x your money in 10 days, something crazy like that, right?
Yeah.
So I think there's different reasons that you invest in real estate depending on who you are, and that's why there's so many niches, right? You can go into a development deal, which is a little bit more risk, higher return versus a simple acquisition. But yeah, in regards to returns, that's probably as far as we can get into.
Yep, that's perfect. That was actually a really great description of what someone could expect and getting involved with real estate and the reasons why. So, and I like that long-term cash flowing asset perspective. I think that's great. So one final question that I like to ask all my guests. If you had $1 million handed to you today to invest or to invest right into your business, what would you do with that? No restrictions.
Awesome question. I love it. So I would come up with an allocation for each for the $1 million. And I don't know the exact percentages, but a certain amount would go towards investing in certain small things, perhaps getting a few more assistants, just delegating some tasks. That's the business side of it. I would start going to more events. Personally, that's one of the biggest investments, the best investments that we can make is networking with people and building our relationships. And then the ones that we already have, just improving those. On top of it, one thing that I've heard on a few podcasts and just talking to people, a problem that a lot of people who have capital, now obviously if you don't have it, then maybe this isn't a problem yet, but if you have capital, one big problem is not having access to deal flow, which fortunately I started with having access to deal flow and not enough capital to invest in those deals. So now that if I had $1 million just in my bank, then I would immediately go to my network and just talk to my friends at this point and talk to them about those deals and just diversify. So with different operators that are investing in different asset classes, I would park some money with them, and that's what I would do.
Awesome. Excellent answer. Well, great. Well, if anybody wants to reach out to you, what's the best way for them to connect with you?
Yeah, so you can visit our website at www.donisinvestmentgroup.com. And then if you'd like to just check out a free checklist that we have that allows any passive investor to vet any passive investment opportunity, you can go to that link /checklist. And then you can visit our social media at Donis Brothers on all platforms.
Okay, perfect. Well, I encourage you guys to check out Donis Investment Group, check out their checklist, and reach out if you have any questions. It's an individual, many answers, great knowledge. So, all right.
I look forward to it.
Jeffrey, thank you again for your time. I appreciate it.
Thanks for having me, Zach. I appreciate it.